And we are into video 2 of 3 today. We'll start with Ford. Oh my gosh, the debate over Thanksgiving on the Ford and EVs, it was fierce. It was amicable though. We had some differing opinions, but consensus is that something's got to change in the EV world. I mentioned this because these guys are going to have to backtrack off their commitment to EVs. If they haven't done so already, I don't know. So make sure you know their fundamentals. If they haven't, I would be worried about owning it for the long term. Period. Technically, take out 1070, you can probably get to 1120. But there are a lot of sellers along the way. I am not excited about trading this. If you want to own it for the long term and you just bought a few shares, that's great. Leave room to add more lower. But Nick, it's how low? How much lower can it go below 9? It's gone to $1 before, if I remember correctly. So I don't know how low, but I know that it has sellers. It has an opportunity to get up to here, but it has sellers everywhere. And if the buyers fail at 960 for whatever reason, market crash, whatever, it probably will be in the low 8s. But it's a legit company with great products and great fans. I just question the overall industry direction at this point. So technically, it is tradable, higher lows, opportunity to break out. GE, it's extended from a technical perspective, but it did break out at 118. So now that candle right there above 118, the bulls have the opportunity to go wherever they want. If you look left, there's not much to short, right? So that makes the bears, the typical shorts that sell the company short, they don't have any reference points that they can rely on. So the bulls have the momentum, and only the bulls can decide that they've had enough. So the bearish outcome of shorting right now has become tougher from that perspective. So let's see. My puts on this company, by the way, should have stopped out a long time ago, because when I sent them out, I said 30 to 35% stop out level, right? And they were based on the fact that fundamentally the company has not provided any good news. It's been like selling this asset and streamlining, yes, okay, but that headline has been here for a couple of years. But these bursts are on headlines of, oh, I sold this company that branched out with this and branched out with that. So above 118, the bulls have leveled up their game. So we'll see what happens. GE Healthcare. Okay, speaking of which, this is one of their spin-offs, I guess. I don't like it going into 75, but it is a new company, so take that with a grain of salt. Maybe it's easier to get to 71 than it is to 75 or 76. Yeah, 75 or 76. So it will follow the market. How about you use this failure from last week as your mark to see what happens? The drum roll mark, 74.25. If you bought a put in this one, then you get out if they go above it, kind of a thing. But there's also a couple of sellers at 74.80 from these two here. We'll see. GM, same concerns as Ford. I don't know if this looks like a better chart or not, but they do have harsh buyers at 27 and 26. You lose 26, you're probably going to 24.20. And they're selling rallies. So you can say that the bears are in charge of this one. And once they lost this blue line, whatever that line was, I can't remember, they gave it up. They said, we're done. Because look, they last time they tried to get it back here. They tried to hold it here. They lost it. They tried to get it back. It's like, oh, okay, we're done. So now you have a huge seller at 30, which will be your next catalyst up, and a huge seller at 32. So buy the dip as long as they hold this, and exit if they don't. That's the trading comment. If you are an investor for the long term and you want to nibble long with a few shares, partial entry, okay, I get it. You like the company. But there's no reason why this company is not below 20. I'm going to be nice, below 24. Okay, rallies into the blue line are going to be met with sellers. And if for some reason they lose where they bounced off, they will be maybe even below 20. But that is not my forecast. They have the opportunity to follow the market and recover the necklines they need in order to circumvent this technical setup. Okay, this one may have catch up to do. Like the other, like Microsoft, for example, broken out to new high. This one has a breakout line right above here, 141, and it's gone to 152. But this is going into a big seller. So if the markets break out, yeah, this one will take off. I would buy the dip in Google. Look left and bunch of sellers, bunch. So I will be buying dips in Google. Fantastic company. The chart doesn't look so fantastic. Look at all these sellers right there. The bulls are in charge, but only to come back and revisit this disaster. Goldman Sachs. So I went long for us with a credit put spread, and then I added an optional credit call spread. I have that optional credit call spread. I think I could have closed everything for no damage last week. I need to revisit that. If that's the case and you're worried about it breaking out from 342, then you should close everything and call it, you know what, we tried to trade it and it didn't work. It didn't lose money, but it didn't work. I'll have to revisit the math on this one, to be honest. I don't remember. 342 is the breakout and 346 is the other breakout. And I believe, it's a pretty high dollar stock, so we'll see what it does. If it falls through 330 or 328, that would be just normal price action, but it doesn't mean it needs to fall there. So if you have a credit call spread, if you're short with puts or short stock, you should respect that 342 line and exit if you want. Use it as a stop out point. Chart industries. They better hold that 105 level. Otherwise, they go to like 70. And they have a lot of sellers at 145. So 145 was an inverse cup and handle or head and shoulders that they lost that had $36 in it, which was exactly the dip, like almost exactly the dip. So when they when they teach you this in inverse cup and handle school, that's the target. Yeah. So now they're going back into the neckline. That was a big problem. I would not go long into that. Buy the dip into the support it just established above 125. If it falls to 125-ish, would be a good entry point from a technical perspective. HPQ, I don't know much about it anymore. All I know is that this zone that they're trying to recover was support, and then last-ditch effort, and they couldn't handle it, and this is their second time into it. So I think it's fine getting here, but getting to 30.5 is going to be a lot tougher than getting up to here. So if you were long up to here, I would exit. If you're looking to start now, again, I would have you consider flip your understanding of investment instinct on its head, because you're going on instinct, and your instinct are exactly the opposite of what they should be. I'm not criticizing. I'm just giving constructive criticism. So if now we feel better because they just rallied and shrugged off and they had an event and it's like, okay, everything is hunky-dory. Technically, the stock is going in a place where they've sold it hard before. So the same transactions are going to resurface. So it's not a starting point here. Even if it goes to 32, Nick, you were wrong. Yes, on this one, but on 90 other times, they wouldn't be wrong. Hertz, trying to base. If you're now trying to short, would be the opposite, same comment of somebody else. Oh, now I'm trying to short it because it's fallen and it doesn't look like it's rallying. Yes, but it's not an easy short. This one is a meme stock, if I remember correctly. So they have buyers below. They told you. So if you lose 8.1, you'll probably end up at 650. If you want that opportunity, short it into 950 and stop out immediately, because if they take 950 out, they get to 11. So you have a catalyst at 950 and a buyer at whatever that low that was, 8 and change. Ping pong inside that and consider those lines as action. Boom. IBM, the most overachieving stock of the decade. What do I mean? The company sucks and the stock is fantastic. I don't get it. Look at this P&L. How freaking boring is that? And look at the stock. Champion, breaking out. Google can't do this. Anyway, Okay, so they just exceeded a selling point of 153, roughly. It's a little bit more, a little bit less. They're going into more sellers above, but you can't stop it. I would not short it. I would not chase it long. The company is boring as hell, and they haven't been able to adapt to this new world of technology, even though they kind of invented it. When I was a kid, they were talking about artificial intelligence from IBM. Remember, there were machines playing against chess and chess against, chess masters at the time. What? And now they're not even in the conversation, very rarely. So technically, the stock is overachieving right here. In theory, it should be headed much higher. So if you're looking to chase it, I get it. Just make sure you're a momentum trader. I don't believe in the company, and not yet until they prove it to me. Technically, dips into 148 and 146 are reasons to get engaged long in this breakout. Look, they're buying dips. Dip, dip, dip. So on this time frame, like in most recent history. So the bulls have momentum. Who is this? Boy, we discussed that one too, because I was among doctors as well. The white path is unfolding, but now they have a giant hiccup at the prior selling zone of 318-ish, that prior fail. So that still works. This one still works. So I did give them room to go up. If it dips, I would buy the dip. I wouldn't short it, but I wouldn't get long here if I'm a trader. It's going into a prior fail and a prior failing level. They might hit a hiccup, but it's a good company. So any dips, I would buy them. When I say buy the dip, that means get long somehow. Sell put spreads, buy shares, and it's never all in, not in this environment. Just so I can clarify this buy the dip comment. JP, not for me. It's done well, probably too well. Banks are at the mercy of headlines, and these days the headlines are what's going on with the long bond and the short bond. Miraculously, the long bond rallied, and that's the other conversation I had with family member. I sounded like a freak because I'm telling them some things that sound like I'm a conspiracy theorist, but I find it very opportune that the long bond rallied. So the yield dropped when there was chatter of Bank of America being in trouble as far as holding assets. So very perfect bounce to avoid a Lehman moment, not to even come close to a Lehman moment. Not that Bank of America was going to fail, but there was chatter around there that Bank of America was getting in trouble because of the super spike in the long bond. And that reversed. So not an obvious entry point at 155. That's all I'm going to say up here. Good bank, good reputation, dips are buyable, choose your levels. I like 150 or lower. 148 would be better. Kellogg's 54, 55 looks like a place that they lost and they shouldn't have, and now they're getting back into it. So I think 55 is a target, not a starting point. So if somebody is investing in Kellogg's right now, I get the instinct. This whole area was a buying point. So it comes down to what is your time frame. Technically, here's another one of those. When they lost that was the target. And look at that. Pretty close, right? So now they're going back into that neckline zone. A lot of sellers, in theory. Not a good starting point, but maybe a good company to invest in for the long term. I don't know your goal. If now you just want to buy a call, I don't think you're going to make money with it. Lilly, I don't trade it. It's crazy. So not to cuss, it is absolutely a crazy stock. I don't know what kind of drugs. They must have a weight loss drug or something like that, because that is a lot of exuberance. The P&L is boring as hell. So they must be promising something for the future, because the P&L is great. I'm not complaining about it, but it's just says, hey, it's a good solid company. And then you look at the stock and it looks like harsher than Nvidia. Like, so what is happening here? Yeah, let's see. This is like an NVIDIA type stock that is revolutionizing the business and more income streams and whatever. So I clearly don't understand it. So don't short it because you disagree with it. And if you want to get long, buy the dip technically into anything below 570. And if you can get it at 520, that's gold. But make sure you study it and trade with knowledge. It's not all about charts. Fundamentals do matter. Lamb Research, they're trying to break out, just like the market is trying to break out. They're close. So if it gets to 740 and it dips, I would get long because it might go to 820. I said those, and somebody's going to have the inkling to go out and buy a call. That is not what I said. I said if it breaks out and it dips. So you do have buyers below, but you have a lot of sellers up here. If you're just now buying calls because you feel like it's better now and it's safe, again, I'm going to push back on you to check your instincts. You might want to flip them upside down. And you can flip the switch. Everybody's done it. Everybody that's successful has had to flip the switch. It's a normal transition. Okay, so buyers below. So if it ever dips into 660 for whatever reason, that is an opportunity to get long. And it's not a dollar amount, like 680, 650, back into the neckline, this resistance line zone. Okay. LSCC, Lattice. Okay. I think we discussed it when they reported earnings and they fell. And I don't know why I didn't pounce on it. So do your homework and see if they shrunk in sales. It doesn't look like it. So this was an opportunity to get long for somebody, an investor. And it yielded trading results. So if you got long anywhere in the bottom third of this dip, you have profits. If you invested it, then you're fine. Just sit on your investment. If you're trading, you have higher lows and your next trigger is 61.40. Maybe it gets you to 64, 65. That's the trading comment. But if the fundamentals are still great and you just caught a dip into a solid base, then that's a good starting point for an investment. What is this? Louis Vuitton. Okay, so 158 plus is a catalyst to 166 or 168. So it recently fell from a zone, actually 159. I would not, it's not 158, it's 159. Higher lows, that's pretty solid. Have they had that before? They have. So don't be faked out by solid rallies into pivot points. Buy the dip into 150, 149 for that opportunity to curl back up and bust out if you're a trader. LVS, so I'm out of my position. I am out of that position right there. This was recommended by someone and it came down to be pennies. And I left money on the table just because I'm uneasy about the whole industry. If you lose 48.60, you might end up at 47.60 or 47.40. And, Wolf Wave says much lower than that, so I'm out. I don't want it. My risk is down here, but I don't want to. I don't want to sell a call spread to hedge it or anything. I was just like, okay, I got a little money out of it. Thank you. Bye. McDonald's. Wow, what the heck? Did they invent diet burgers or something? Because this is not a starting point. It fell apart in September, and now they're just getting back to that falling apart zone. This here, folks, is never a starting point. They could still bust out to 294, but 285, I think, is a big resistance level. So I would not start longs here. If you want to start longs, get long on dips. How deep? The deeper the better, clearly. You have a buyer at 276 and better buyers at 274 or lower. Mondelez. Okay, so I gave you two circles. It's ping-ponging inside the two circles. This played out. This really played out because they didn't bounce. They went straight to the arrow and then some. So you can do it that way. I'm going to move it out of the way. I'm not like changing my charts. I was moving it out of the way. And this I thought would be a zone of contention. They didn't respect it. They went all the way down to here. There must have been a headline. They recovered it pretty quickly, and they went to another point of contention. So use those two circles as your bumpers. I think there's a buyer at 70 and 69.5. If it falls there, I think it should hold the second time around. So at the top, very top sliver of this circle, there are buyers. And anything above here should be resistance. So sellers I would not get long into 73. Use dips to get long. MetLife. Okay, this is a bearish posture into that. If you take out 64, 65, you kind of reverse this bearish posture. Theoretically 65.50, but otherwise it's easier to come down to 61 than rally. Meta, not an obvious entry point, but if the markets continue higher, this one might as well. It's easier to get to 325 than it is to 355, but I wouldn't short it. Look left, a lot of sellers, but they're pretty old, so I don't think they're very aggressive. So one can say it's going to rally to 365 or higher because it just beat two prior fails. And if it dips and comes back and make a higher high than last week, I think it's going there. So it just came out of this traffic jam. We'll see. MGM, not an obvious entry point from a trading perspective, but you do have a trading opportunity if they can beat this prior fail right there at 41.40. But if you look left, oh boy, it's not going to be easy. If they do that, 43 is their next target, and I would exit. You can buy the dip into this area of 38. Here it looks okay. Here it doesn't. Okay, so March, they held, lost it, recovered it, went above it, bounced, lost it, and they're trying to get back into it. This whole zone is a lot of resistance. Look left, bunch of volume. Not going to be easy to beat that stick. So make that stick your marker. Above that stick at 98 or higher, maybe you get some speed. Otherwise, buy the dip into 92. We probably have a better footing. Moderna also discussed it on the holiday. A couple of people were optimistic, and I do respect their opinion. So do your homework on the company prospects as far as licensing their technologies, if there is such a thing, because the sale of the COVID thing, I think, has run its course. What happened is they sold so much in panic that they pulled sales forward, and the P&L kind of doesn't do it justice. Like nothing, which is okay. That's how it is with these biotech companies. And then boom, everything, and now nothing again. So losing billions. Make sure that you know the company. Technically, it's pretty difficult. I think I would not want to be involved with it at all, personally. Technically, the chart looks hideous, and fundamentally, I question the success in the long term. At least, let me rephrase it. I think there are a lot of bumps in the road. So, if I'm long already, I'm not adding. If I'm buying as an investment, that's okay. Just leave room to add more later because you might have the opportunity at 40 or 45. I'm just saying that. It could go there. I'm not saying it should go there, but it could go there. Technically, there are indicators that take it there. So be careful. I'm giving you things. Okay, so this we've had twice. I don't know what this is. I can't help you with this. So you can ask me 1,000 times. I don't know what it is. I can't help you with this. Study the company and make your opinion based on that. MRVL. Good company, I hear. P&L doesn't show that's great, but it's good revenues and such. So let's use these as the floor, which they fell through, but that was temporary. And this as a limit. So now you can see, you visually can see anything above 62 is far extended, and anything below 49 is a bargain. So I'll put an alert at 50 or lower once it gets there. And if I'm long, you have an opportunity to break out of 58, but you're going to head straight into that. That would be your exit. This is here where I said that back here. I said the bulls need to be above 48 or whatever, or get, no. Anyway, where it was toying with 48. But that area has been in contention for a bit and has a lot of volume. That red line I didn't draw. That's that mountain of volume. Okay, and then no volume below. Like this here does not have a lot of volume. So it's easy to slip down. And if it does, I think it'll be scary, but it'll be an opportunity. Microsoft, all-time highs. What do you want? It's going after my stick. Okay, that doesn't mean you load up, but definitely don't short it. It's got everything going for it. Everything. As long as the market rallying, this one is out of control. Now, this is not an obvious investment opportunity up here, all in forever. You will have better entry points if you're an investor. You just need the courage to see it run without you. Micron, gosh, this is another mystery to me. I don't get it, but don't listen to me. Do your homework. Look at this P&L. It's crap compared to what it was before. And people still gobble it up. It must be its position in the control over the supply of something that people like crack almost. Yeah, I've got the crack. Yeah, I'm not selling a lot right now. But boy, if somebody wants to buy crack, they got to come to me. So I really don't get it. I really don't get it. So a lot of sellers above here at every point in time. And that's not a reason to short it. So use its own sticks against it. You have sellers at 79 and sellers at 81.50. Take out 79, you get to 81.50, I would exit from a trading perspective. Buying dips into support zones, that would be an investment perspective. And a trading comment. Netflix, great recovery. If it takes out that prior fail, it probably can get to 600 plus. That is a big if, but that's the kind of stock that can do it. All it needs is the market to rally one more week, and she gone. So what do? I don't chase it unless I'm a momentum buyer, and I buy dips if I'm somewhat of a swing trader. So if it falls into 460 or 440 or 420, whoa, get it long for the opportunity to curl. Now, if the market's hiccup, it could fall to 380. So you should know how to get long and know how to manage the risk. But maybe it dips one more time. Do I have lines? I kind of do, but not really. So it could curl to come back and bust out. So that would be the swing trade opportunity. If we have a hiccup this week and it does one of these, maybe this one will get you that. All right, so video 3 coming up.